Welcome to the Doubtful Investor. Today, we dissect an anomaly of the financial markets, the Nvidia paradox. Before we start, please like and subscribe. Full disclosure, I hold a long-term position in NVDA. This is not financial advice. This is for educational and entertainment purposes only. Do your own research. We begin with a bizarre phenomenon, the post-earnings stock slide. A company posts historic numbers, yet the herd sells off. This is a failure to comprehend the magnitude of what is happening. We ignore the noise. We focus only on the signal. And the signal being generated by Nvidia is deafeningly clear. Consider the facts. Nvidia just delivered a monster quarterly report. $81.6 billion in revenue, with an unprecedented $58.3 billion in GAAP net income. These are not growth numbers. These are sovereign wealth fund numbers. Yet, the price dropped. The crowd is making a failure of imagination. They analyze a simple line chart, refusing to accept that the fundamentals have broken the scale of previous market analysis. There is no limit to a company's market capitalization as long as it generates undeniable value for its customers and relentless profits for its owners. It is time to forcefully inject the raw quantitative data into this discussion. We must prove the undeniable undervaluation relative to its supposed peers. Observe the pure data. Focus not on sentiment, but on the metrics that define sustainable generational wealth creation. The noise is removed. Only the signal remains. Their forward price to earnings and PEG ratios are compressed, suggesting the market is still pricing them as a cyclical hardware firm, not the infrastructure utility they have become. We apply the gold standard of software valuation, the Rule of 40, a metric meant for SaaS companies, to this hardware giant to test its true efficiency and market position. Nvidia achieves a mind-bending score of 138%. This combines their massive revenue growth with a 53% net profit margin. The moat is not just stable, it is expanding rapidly, leaving the stock price far behind. The undervaluation is compounded by the market's inability to price in Nvidia's immediate and total dominance of the central processing market. The newly scaled Nvidia Vera CPU is not an incremental update. It is a tectonic shift, purpose-built for the demands of next-generation agentic AI. Performance metrics are devastating to legacy architecture. Vera delivers 1.8 times faster task completion and double the energy efficiency of traditional x86 CPUs. This performance gap is why Vera is being rapidly adopted by all major cloud hyperscalers, Oracle, CoreWeave, ByteDance, and the frontier AI labs, including OpenAI and Anthropic. We now pivot to the most recent evidence of market takeover, the highlights from this week's Computex Taiwan event. The core revelation, the newly unveiled RTX Spark Superchip. This is a formidable integration, combining 20 high-performance ARM CPU cores with the powerful Blackwell graphics engine. This is no mere concept. Microsoft has chosen to bake this chip directly into their flagship Surface Laptop Ultra, launching a direct, full-spectrum attack on Apple's silicon dominance. The conclusion is simple and stark. From cloud superclusters down to local consumer laptops, Nvidia is not building a business. They are constructing an absolute monopoly on the infrastructure of intelligence. The noise is deafening, fueled by short-term trading psychology and market hysteria. But the signal, for those who choose to observe it, is clear. Do not trade the line chart. Invest in the fundamentals of technological supremacy and compounding profit. The paradox will not last. This has been the Doubtful Investor. Always remember, we are searching for signal over noise. Again, please like and subscribe.